Hello viewers, how are you all doing? I know you're all doing really well. Namaskara and welcome to the inaugural episode of Rupee Rakshak News Channel. I am your host Raghu Rao. Every week, I'm going to take you through precisely those things that are important for you to grow your money and few other things to make the money part more interesting. Today, we start with our inaugural episode, which is an Independence Day special from Rupee Rakshak. Rupee Rakshak is a brand of Finmo Investment Advisors Private Limited, a SEBI RIA number INA 2001490. So, whatever views we share on the financial markets for the week is from a registered financial advisor. And it's for your benefit and education, but this is not an investment advice. So if you need investment advice, you're welcome to go through our website rupeerakshak.com, contact us, and if you like our coverage of views and news, subscribe to this channel on YouTube. So let us look at the bond market updates this week. US 10-year G-Sec yield, the government securities yield, closed at 4.19%, a rise of 5% this week. On the other hand, India's 10-year G-Sec yield closed at 7.2%, a rise of 0.33% this week. There was a sharp rally in US dollar index, a sudden jump which was seen in the USD INR of 75 basis points, USD INR consequently trading at 83.29. There was a cut in the crude oil demand from Saudi Arabia. We have seen a slight fall in the Brent crude oil for the week of minus 3.64%. Brent crude therefore trading at $84.5. Coming to gold, gold had a negative sentiment with dollar index rising and seen a sharp fall of 1.19% for the week and trading consequently at $19.03 per ounce. Let us look at the bond market update for this week. This week, the major news has been the RBI monetary policy update and outlook. RBI kept the repo rate unchanged at 6.5% and reverse repo at 3.35%. The Monetary Policy Committee maintained gradual withdrawal of accommodation as its monetary policy stance. The MSF stands at 6.75%. Vegetable price shock may reverse quickly. Real GDP growth projection retained at 6.5% for FY24, still keeping India ahead of many countries in the world, and revised India's inflation projection from 5.1% to 5.4% in FY24. So the inflation data released on 14th August on this Monday was seen at 7.44% versus 6.40% year on year. Major contributors to this inflation has been the food prices. Who hasn't heard of the tomato prices skyrocketing? Coming to the Rupee Rakshak bond baskets. Rupee Rakshak Bonds Basket Advisory is a AAA rated sovereign guarantee bonds with high liquidity and half-yearly interest. You can sell anytime and Rupee Rakshak provides the liquidity and it is the best replacement for a bank FD. Now let us look at the top 3 bonds, Government of India securities available from Rupee Rakshak. The top bond is the Government of India security at 7.33% yield, followed by the G-Sec at 7.32% and then 7.31%. Now coming to the government security that had the highest yield of 7.33%, let us look at little more details. This is the Government of India security at 8.3% coupon rate, a coupon rate being the fixed quarterly or half-yearly or annually interest rate as per the bond that is given by the bond issuer, in this case the Government of India. And this is a half-yearly interest rate payment of 8.3% and the bond matures in 2040. And the yield, as I said before, is 7.33%. Now the top state government guaranteed bonds. Previously we saw G-Secs, which were sovereign government bonds, and what we are going to see now are the state government guaranteed bonds, which are issued by the PSUs of the state government backed by the sovereign guarantee of the state government. The top 3 state government guaranteed bonds are the Meghalaya Energy Corporation Limited, MECL, with a coupon rate of 10.55% and an yield of 9.69%. And the UP Power Corporation bond with a coupon rate of 10.15% is the interest that you get quarterly from the UP Power Corporation, and the yield of 9.59%. And the third top rated bond in the category of state government guaranteed bonds is the UP Power Corporation Limited with a coupon rate of 9.75% and an yield of 9.2%. Now let us take a detailed look at the UP Power Corporation bond, which gives a coupon rate of 10.15% quarterly interest and maturing in the year 2025. So this bond gives a coupon rate of 10.15%, as I said, which amounts to an annual pre-tax interest payment to you at 1,01,500 rupees. The face value of this bond is 10 lakhs, and which is the minimum investment required for purchasing this bond. Mohan, for the benefit of the viewers, I have a question for you. Why should people invest in bonds? Bonds, as we know, are fixed income, and so are FDs. They all give fixed interest periodically. So what is the advantage people get by investing in bonds?
What you said is right, Raghu, because a lot of people, they love bank FDs because they can see the branch manager, there is a relationship, and they are seeing the bank being there in the same place from 20 years, 30 years. So there is a level of trust with the banks. But with bonds, you don't know what it is. The general public, the retailers, they don't understand bonds. But should they invest in bonds is the question. Why should they invest? You asked about two aspects. Why people are having money in the FD? One is the safety, and the second is the return. If you have two options and both have equal safety, then both have equal returns, then you don't have a choice. You can take anything. And you have a bond, let's say government security that you are investing, and you have a FD. In comparison to bank FD, a government bond issued by Government of India is much safer, probably 10x. A bank can go down, but government cannot default on its interest payments or the capital. Particularly government like ours, country like a solid financial status countries like India. There are countries which will default like Pakistan, may default like Pakistan. But in India, the government security is more safer than the bond. Now, the second question that comes is the return higher or is the return low? So, which one do you want? If you want to weigh safety over the returns, you should actually go for government securities. The question that comes is it safe? It is safe, and it is just the question of knowledge, believing in it. Once you invest in the government securities, because whatever you invest, you go through a system and you transfer the money directly to the Government of India through the ICIL corporation. So it is safe. You get your bond in the form of a demat, in your account it lies, and the interest payment comes to your bank account on the prescribed date. So if you have return higher than the bank FD, definitely you should go with government securities. If your bank FD is normally, what happens over the period of time, in my experience, the bank FD will most of the time match with the government security yield. The long term yield in India has been about 5 to 5.5%, and the FDs always go with the government securities yield, because what would banks do? They also park the surplus money with the RBI and with these instruments. You can directly buy government securities if you want highest safety, no questions about that. Other than government securities, if you are buying any other bond, you have to be very careful in analyzing the ratings, the change in ratings every time, and you must go with an advisor who knows the markets well. There are risks in every bond also. So it is very important that on two parameters you select the bonds over the FDs. One is, if you get higher safety, best is to go for government securities, and beauty is it is highly liquid. And today we are in a digital India, every transactions happens in your own account. So it is very safe to invest in government securities because of the highest safety. And if you always find, right now if you see, the yields are much higher. And once you buy a government security, you are locking the yield. If you buy it today, government securities. Now, if you don't sell it for next 5 years, the rates won't change for you because you will continue to get the same coupon rate. Especially right now, there is a big advantage if people buy government securities in next 1 to 3 months. The biggest advantage is today India inflation is under control. The RBI has been rising the rates continuously in the last 1 year and it has stopped in last 3 months. And probably once the takeoff comes in, the growth comes in, the RBI would not further increase the rate, probably it will stay there or reduce. When the interest rate is reduced, then the demand for bonds will increase and people who buy government securities now at whatever 7.13, 7.2% kind of an yield, when 6 months down the line, 1 year down the line, the FD rates will become 5%, 5.5%, 6% when the interest rate reduces. It is normal thing that in any developing country, when the GDP is increasing, interest rates is likely to fall. At that point of time, this 7% looks like 20%. When you have an FD which is giving you 5.5%, if people remember just about 1.5 to 2 years back, the FDs were only at 4.5% in SBI and HDFC Bank. Now it has increased because rate has increased. Now there could be a reverse situation where rate cut starts happening. If you buy government securities now and hold it for next few years, you are definitely going to get the advantage of getting higher returns, even if you sell 3-4 years down the line.
Okay, so what you are saying is, since the interest rates are peaking, if you are contemplating buying bonds, this is the best time to buy bonds because you can lock in a high yield. Absolutely. Thank you, Mohan, for the insight into the bond market and the purchasing of the right bond in the right way. Whether you're looking for opportunities to invest some money right now, or you want to make sure your investments are doing well, you need to know equity, bonds and mutual funds. We are covering these in our weekly updates to you. So please keep coming back to this channel every week. We bring you new updates about equity, bonds and mutual funds every week. If you liked watching this news, please subscribe to our channel on YouTube and come back next week at the same time. We would be glad to see you here again. Thank you. Thanks again for watching. Signing off, this is Raghu.